Hello and a warm welcome to Personal Finance. I'm Kukule Tutele. In studio with me this evening is Batanai Madzika, who is an independent consultant at Chariots Capital Partners, who's going to give us a few pointers on how we can turn our WhatsApp into a fully fledged social savings group using technology efficiently for our money terms. Good to have you with us this evening, Batanai, and thanks for making time.
Thanks, Kukuletu. Thanks for having me.
Let's talk about this green piggy bank on your cell phone. And I guess it's using the social media platform efficiently for financial advice. How does it work?
Yeah, maybe just to give you a background around piggy bank. When we're talking about the piggy bank, we're talking about savings generally. So around March 2015, last year, the National Treasury introduced tax-free savings. This was basically earmarked at promoting a savings culture within South Africa. I think, from statistics generally, you find that in South Africa, most people are not saving. I was just reading a report done by FSB, stipulates that something like 51% of people in South Africa don't really save. Sure. And the most common savings product would just be a bank account. So on the background of that, the National Treasury introduced tax-free savings accounts to just stimulate the culture of savings within the general populace. The first thing that we should understand about tax-free is that from the word itself, they are actually tax-free, which means that investors or clients that probably want to invest in these instruments are not taxed at all, whether it's capital gains or it's interest. They're not taxed, which makes it quite attractive, especially when you're looking at the costs involved within investments. And then the other second point is to highlight that they are very liquid. Of course, there's an advantage, of course, when you're looking at investments generally, to invest over the long term. Mm-hmm. You gain compound interest, and then, there's always that benefit. But the key thing is the liquidity portion when it comes to tax-free savings. Unlike, for example, a retirement annuity or a normal endowment whereby you have to wait for quite some time to have access to the funds, with the tax-free savings account, it's actually liquid, which means that you could actually choose to withdraw your funds.
But there are certain restrictions there, if I'm not mistaken, right?
It just depends with the financial advisor or the service provider that you're dealing with. But generally, there shouldn't be any penalties for withdrawals. So which makes it quite attractive from that perspective. Of course, you take away the advantage of compound interest when you withdraw funds. But one thing that we like, or that I like about tax-free savings account is that they then allow you or a group of investors or clients to come together and invest in these instruments with the objective of lowering the administration cost. Which means that the larger the fund size that you have, for example, if you have a group of 12 people or even more, you probably have a larger fund size. For example, maybe it's 1 million. You find that the cost or the administration charge on those would actually decrease, say, from about 2% to something like 0.2.
You bring that up, and first thing that comes to mind is stokvels, because that's a popular method of saving or investment groups here in South Africa. But talk to us around the restrictions and the rules that might apply there, because I know that for an individual, you can't save, more than $500,000 regarding tax-free savings account. But if we come together as a group, do those limits still apply, or how do we work around
Yeah,
them?
the limits still apply from an individual basis.
Okay.
For example, if you're part of a group, you still have to work within those limits. For an individual, the yearly limit for 1 year is 30,000.
Yes.
We are not supposed to go beyond 30,000. And the lifetime limit is 500,000 around. Which means that if you go then beyond that, there's a penalty, sort of a penalty, you'll be charged at 40%. You see. But the bottom line then is that at least you invest something, and from a national treasury perspective, they're actually encouraging people to save or to invest. Yes.
Talk to us about the technology theme and how that also comes into play, because a lot of people communicate via WhatsApps. There have been some false stokvel groups as well on WhatsApp. But how do we go about it using it the right way? The
right way. Yeah, if you're looking at how social media is really affecting people, if you just walk into a mall or anywhere, I mean, in a bus, everybody is on WhatsApp. I mean, they're connected to friends, family, church. And within WhatsApp, there's a platform to create groups. Whether it's a family group, it's a group of brothers, a group of friends with similar objectives. For example, I'll take an example. For example, if you're thinking of going on a holiday with your group of friends, you can come together, form a WhatsApp group with an objective, say, to go on a cruise. And then you could use that to then invest with that objective, to invest in a tax-free savings account that you then withdraw for a particular objective.
But tonight, when it does come to tax-free savings, so there's so many options available, from the big four banks that you transact with to larger investment houses, and many of them offer you exposure to different asset classes. Yes. Some are equities, some are just a pure cash fund. How best then does one need to base their decisions as to which tax-free savings? Yeah, exactly. How to select them?
What I usually recommend people when they invest is to consult, the experts or the financial advisors that are knowledgeable when it comes to investments. Because what happens is that when you do investments, you should do a financial needs analysis, which then helps you to establish your risk profile. For example, you could be an aggressive person in terms of your risk profile, you could be moderate and the like. So depending on your objective and also on the risk profile that you fall into, then only then can we match you with an appropriate asset class. For example, if you're aggressive, then a financial advisor will put you in an equity fund. If you're moderate, then a money market would work for you. Yes.
On that particular note, as well, I take it that's where you also need to be cognizant of costs and fees that might be involved, even though, as you've alluded to, from a tax perspective, nothing there will apply.
Yes. So from a tax perspective, of course, you're covered, no tax, so as long as you maintain those limits and you don't go above 30,000 or 500,000 in terms of the lifetime limit. Of course, in terms of the administration charge, it then depends with the financial service provider. But like I said, if you come as a group, you could actually save in terms of the administration charge. So the WhatsApp platform or the group, the aspects of social groups would help you in terms of lowering the costs, which means that by the end of the day, you've got a good yield on your investment. Yes. How
successful have these been in the past, and what's the pickup like from your engagements with various clients? When
you look at the tax-free savings account or tax-free save investments, you find that they're quite new. Like I indicated, they were introduced last year. So it's still early days to actually say that they are successful or not. But from numbers that I'm seeing, I think so far 2.6 billion rands has been invested in tax-free savings account, which I think is good. But like I always say, is that in terms of improving take-up rates, there's need for financial literacy, of course. South Africa, I think, there's a bit of lagging behind in terms of financial literacy. I think financial service providers should actually do more in terms of educating the public, to do more conferences, workshops, just to educate people about what's happening in the financial markets. Because most people may not be aware of the tax-free savings account. And that's why probably they invest in formal Stockville kind of investments. Yeah. So true, broadening the landscape of thinking when it comes to managing their money. But keeping with this theme of technology, you've mentioned the forming of the structures of the groups through WhatsApp and how that can also reduce costs from the investment and saving perspective. But talk to us about using technology as well overall. Are we doing that sufficiently? I mean, a colleague of mine the other day was just commenting that she doesn't remember a life before for banking apps. So are we finding that consumers are using these efficiently to help boost their savings or exposure to financial tools and models? Yes, I think most people are moving in line with technology. I mean, if you're looking at mobile things such as mobile banking, I think a lot of people are engaged in mobile banking. I think it's really about integration. I mean, for example, social media. We know that people are using social media. We know that people are on Facebook, people are on WhatsApp. So it's up to the financial service provider to actually find ways of integrating that to their normal business so that they can actually help take-up of financial products. Yes.
Well, we've certainly said quite a bit, but let's catch up now on some of the key takeaway points from tonight's discussion. But tonight we've touched on a little bit of everything, from technology to tax-free savings accounts to groups, and really taking advantage of those structures to reduce costs. But for our viewers who caught the tail end of the conversation, what do we need to bear in mind, the top key themes?
The top key themes will be the tax-free savings account is available with most financial service providers. It helps you in terms of reducing your cost on investments because of the tax-free advantage. It's very liquid because you can withdraw your money anytime. But the major advantage, of course, is that when you invest in these instruments, in the long term, you would have the advantage of compound interest. And then you can further reduce your costs other than just tax. You could reduce your costs through groups. And we are saying with the WhatsApp and with the trends that we're seeing in terms of WhatsApp groups, family groups and the like, you could make use of that to actually help you reduce your cost on investments and also come together with different parties with the same investment objective to then invest in these instruments that I think are very useful for investors. Yeah.
Using group structures to ensure that you reap the full benefits and hopefully make away with costs. But a big thank you once more to Batanai Madzike, who is an independent consultant at Chariots Capital Partners, for joining us this evening. Good to have you with us. But that's how we leave it here for Personal Finance this evening. Remember that you can get in touch and share your views on how investment clubs have performed for you. Send your comments to @CNBC Africa using the hashtag Finance410 or to myself @Gukumfupi. Until next time, it's goodbye for now.